and welcome. You tune into Your Trades with me, Ankita Saxena, and with me is Kanishka Sarkar. In the next half an hour, we'll take you through how the market shaped up in today's trading session and what can we expect come tomorrow morning. But it was a day of advances today. In fact, what a stellar recovery coming in. In fact, from the day's lows, the Nifty managed to climb almost 1% from the day's lows. We managed to cross the 24,900 levels. In fact, we were very close to 24,950 levels. So that's where Nifty ended the day. As far as Nifty Bank is concerned, ditto, a good reversal coming in, a reversal of almost a percent, 573 points of reversal from the day's lows, and Nifty Bank as well. 55,946 is where Nifty Bank shut shop today. As far as the sectors were concerned, Nifty IT has been leading from the front from get-go. In fact, that was up 1.5%. The entire mid-cap space within Nifty IT was a buzz. Emphasis, Persistent, Coforge, Tech M, all of these counters were trading upwards of 2%. Nifty Realty was another counter that was shining in trade, 1.3% gains coming in on Nifty Realty also. Metals, another counter, another pack that was shining in trade with gains of 1%. We also had, as far as the market breadth is concerned, the interesting thing to note is that we were clearly in the favor of declines in the first half of the day. Come second half of the day, that completely reversed and we saw the advances taking charge. We saw the bulls taking charge. In fact, so much so that as far as the large caps are concerned, we had only 4 names on Nifty that were trading in the red. Rest of them were trading in the green. In fact, names like BEL, Ultratech Cement, HDFC Life, the entire life insurance basket was also buzzing. HDFC Life, SBI Life were trading with gains of 2+%. So these were the advances. India VIX also cooled off. India VIX was trading with cuts of 1.6%, well below that 15 mark. So we are comfortable as far as India VIX is also concerned. But the oil counters were also in focus today on the back of the rising crude prices, whether it is the oil marketing companies or the oil companies like ONGC and Indian Oil and so on, that were in focus on the back of surging crude prices. But that's largely how the market construct was. Kanishka, tell me, what have you got? What are you picking up?
That's right. That's how the market, looked like today. But, a key outstander is, of course, the IT sector. And to discuss more on that, we have Lakshmikant Shukla, who's a technical analyst of institutional research at Yes Securities India, joining us now to help us understand what's the construct of the market looking like for the week ahead. Now, Mr. Shukla, before we talk about, the benchmark indices and the way forward for them, let's first talk about the IT sector, which has, remained a key highlight. So now talking about the Nifty IT index, of course, it was the top gainer today. Now, from a technical perspective, what do you think is signaling this strength, and also how long do you believe this rally could continue?
Good afternoon, Kanishka, and thank you for calling me on the show. So talking about Nifty IT, so Nifty IT is well placed above all its key moving averages, and it has also surpassed previous swing high of 38,300 levels. And then after we have seen consistent upside move, so overall structure is on the bullish side. And today it has also made bullish bell total candlestick patterns above significant moving averages, so which is showing positive sentiment. And that's why we have seen a lot of stock from the IT, large cap IT sector and mid cap IT have seen positive momentum on the upside. So talking about the index, so we could expect that it could continue to trend higher toward the levels of 40,480 to 40,500 levels, where it's 200 DMA is seen, and on the downside, as long as it hold up the levels of 37,700, we will be positive and we could see higher momentum on the upside. Even if we look at the Nifty IT ratio chart of Nifty IT versus Nifty, so it is also trending higher and it has given consolidation breakout on the daily chart. So we could expect that upside move will continue in the IT space in the upcoming sessions also.
All right, Lakshmikant, so clearly a good day in the markets. Tell us, are there any long calls coming from your end? Tell us what are your topics?
So as good afternoon, Ankita. So first of all, that as we have talked about Nifty IT sector, which has outperformed in today's market, and from last few sessions we have seen back-to-back formations of bullish candle in IT sector. So within this space, I have picked persistent. So this stock has given consolidation breakout on the daily chart, and we have seen multiple formation of multiple bullish candle at present levels. So we expect that this ongoing momentum will continue to trade higher in this stock. And if we look at the RSI, so that even RSI has given positive crossover on the daily chart in this persistent. So overall the structure seems to be bullish. So we could expect that it could go higher toward the levels of 6,550, which is our target, with the stop loss of 5,730. And second stock, which we look at buying side, that is Blue Star Company. So this stock has formed rounding pattern on the daily chart, and from last 4 to 5 days, the stock has been making higher tops and higher bottom, and RSI has given bullish crossover, and when we see other indicator like MACD and stochastic, so they are also trading in the positive territory. So one can go long in Blue Star Company, and can keep the stop loss of 1,610, and can expect the upside target of 1,790.
Okay, thank you so much, Mr. Shukla. So a buy call coming in on Persistent Systems and also Blue Star. But on that note, we'll let you go. Thank you so much for joining. Great chatting with you. All right, then moving on, we have Srishti who's joining us now to help us with the... she's standing by with some technical charts. Srishti, which are the stocks where you're finding breakout levels?
Well, yes, we have got two counters on the breakout side for our viewers, and we are just highlighting those. And firstly, let's have a look at the IT major KPIT Tech. This counter was on the roll in today's trading session, and very interesting technical setup is what we have spotted, because it's almost the fourth time when the stock is once again retesting its 1400 levels as a resistance. Not just that, if you will see, the stock managed to actually move above its previous week's high as well, taking a bounce exactly from its 20-day moving average, and a strong green candle formation is what we have spotted. So this is the first counter on the breakout side. Moving on to the next counter then, and that too is a breakout candidate, and that is AP Capital on the charts. Yet again a very interesting one, because if you will see the longer term chart, it's almost the fifth time that the stock is once again retesting that 240 odd levels. A very slow mover when it comes to AB Capital. But not just that, on the derivative side you will see a long build up addition. And what was interesting to see, that after now change of the trend, and which is in the upward trajectory, the stock has once again respected its support of 20-day moving average, and now once again on the move to resume its journey upwards. So these are the two counters that we wish to highlight on the breakout side. Back to you.
All right. Thank you so much, Rishti, for joining us with those breakout counters. But let's move on to the word from the wise. Samir Arora, who's the founder of Helios Capital, is very bullish in India as the allocation to US reduces. Now, he also hopes to see optimism and not a rally if the FII outflows stop. Let's go across and listen in.
So I have become very bullish, not just bullish, very bullish. And the main reason for that is that it is very, very clear in black and white that the world's allocation to US stocks is coming down. And I can read and see many, many articles. You can also see flows into ex-US ETFs. That those funds have started picking up and getting 2 billion a week or something, which they used to get zero money before, or very little. In our case, anyway, we are also getting some flow. V means market. And initially, we don't need to get massive flows. We first need to stop outflows, which were happening for the last since October. So if the FII stops selling and then buying a little, and Indians are buying, the market can stop falling, and you can see it look at it with optimism. I don't think market will go up a lot.
All right, then that's the expert view coming in from Samir Arora. But on that note, we'll take a very short breather on this.
Well, yes, the biggest contributor of Tata Motors, that is the JLR division, has come out with their growth outlook for FY26, where they have slashed their FY26 EBIT margin guidance by a significant number, which stands now at 5 to 7% versus 10% guided earlier. The company does cite that because of the fact that the US tariff threat is at play, the BEV transition, along with that, the China growth market outlook. These are some of the key factors that are at play when it comes to the growth numbers, and along with that, they have all the potential to hamper the EBIT margin performance as well, and hence the company has gone ahead and slashed their EBIT margin guidance to 5 to 7% now. Do remember that the 10% guidance was given back in 2024, where the company did share its long-term growth targets, and in the recent Q4 of FY25 earnings, the company did not come out with a very specific number. And they did highlight that they will be coming out with a detailed presentation on what is the growth outlook for JLR division. But they also highlighted that in the near term, they were witnessing some slowdown and some weakness in the business sentiment as well. So that's one part. The other big commentary is coming in on the free cash flow number, because yes, for FY25, the company did guide for a free cash flow number to be turning positive, and bang on that, the company did manage to meet those guidance as well and the targets there. And this time around for FY26, the free cash flow guidance is close to zero. So there was a bit of a sentiment building up, or rather the analysts were anticipating this number to turn positive, but the company is guiding for a number close to zero on that front. But for FY27 and 28, they have highlighted that they foresee a year-on-year improvement going ahead as well. In terms of the capex, that number stands as it is. 18 billion pounds is what the company committed for their reimagined strategy by FY28, and no changes there. So all in all, that's the latest update coming in on JLR front, where the company has cut down their EBIT margin guidance for FY26 by a substantial number.
All right, thank you, Srishti, for getting us all those details. But now let's go to Rabinder, who's standing by with the list of all the stocks that were buzzing in trade today.
Well, Stellar Technology is in focus, where company has announced the launch of a new generation of data center solution ranging from a cabling to end-to-end connectivity offering designed to power the relentless demand of AI-driven data center infrastructure. Moving to TCS is also in focus, where TCS has partnered with Denmark's largest retailer selling group to drive digital transformation and AI-enabled cloud migration. Apart from this, Godrej Property is also in focus, where Godrej Property to develop a approx 14-acre land parcel in Bangalore with the estimated revenue potential of approx 1,500 crore. Moving to next, HDFC Life is also in focus, where Antique has met with the HDFC Life management, where they have maintained the buy rating with target price rupees 860. They say that the Q1 FY26 is trending better, with April-March 2025 posting 10% retail APE growth and 14.4% total APE growth. Apart from this, on back of brokerage note, UTI AMC is also in focus, where Motilal Oswal has maintained the buy rating with target price rupees 1550. They say that the strong fund performance revival could aid equity market share gains of the UTI AMC. And lastly, Indian Hotels is also in focus on the back of brokerage note, where Jefferies has come out with their note, and they have maintained the buy rating with target price of rupees 980. So back of this, Indian Hotels is also in focus.
And well, sources tell a channel that oil ministry has once again pitched for natural gas to be included under GST, and the ministry has approached finance minister to build consensus. Let's go across to Prakash for more details.
That's an important development coming in, as we are learning from our sources that the oil ministry has once again pitched for inclusion of natural gas under GST. We're given to understand that the ministry has approached the finance ministry to build consensus over the issue, as inclusion of natural gas under GST is crucial for bringing clarity to the sector's taxation system. Along with that, ministry also believes tax clarity is essential to achieve the gas consumption target by 2030, as overall domestic demand is expected to grow on the back of CGD sector's expansion. Therefore, bringing natural gas under GST would be crucial, as it will ensure price affordability for the CGD sector. Along with that, Prime Minister Office is also involved in the consultation process. Inclusion of natural gas and ATF under GST will be implemented in phases. However, states were not in favor of discussing the proposal in December 2024 GST Council's meeting. Let's see how it pans out. Will the finance ministry bring proposal? But the oil ministry at this point of time has once again pitched for inclusion of natural gas under GST.
All right, thank you, Prakash, for getting us all those details. But moving on, another fallout from the tragic Air India plane crash. Now, sources suggest that airline insurance premiums will likely rise by up to 20% in the next renewal cycle. Anurag Shah is joining us with all the highlights.
So, in Ahmedabad air crash, 95% of the liability will be absorbed by the foreign reinsurance companies, and Indian insurers will not suffer major losses in claim front. But as per our sources, in the next renewal cycle, the reinsurance companies will increase the premium, and that will have impact on insurance premium of aviation sector. So aviation insurance premium is likely to increase by 15 to 20%, depending on companies, depending on their fleet size going ahead, because the aviation market is hardening. The rates in aviation markets are hardening in reinsurance space, and the rates will hike in the hull insurance for the war risk coverage and for the third party liability coverage in insurance space. So as in the Air India Ahmedabad plane crash also, the overall liabilities are expected to cross 2,500 crore, but majority of it will be absorbed by the foreign reinsurer. But going ahead, in the renewals, the premium will increase, and eventually the increase in reinsurance premium will be passed on by insurers to the aviation players only.
All right, with that, it's curtains down on this edition of Your Trades. Kanishka and I will take your leave. Thank you so much for tuning in.